Planet Labs just reported a massive $138 million quarterly net loss, which sounds like a total disaster until you dig an inch deeper and realize they literally laughed their way to the bank with a $108 million cash injection. Welcome to Earnings Unscripted. It is June 4th, 2026, and we are unpacking the Q1 2027 print for Planet Labs, ticker PL. And Miro, this quarter is basically the definition of an optical illusion.
Yeah, it is entirely an accounting artifact. The stock price appreciated so much recently that it triggered a massive paper loss on their public warrant liabilities. It was basically a $106 million non-cash hit, but they redeemed all those warrants, pulled in a ton of hard cash, and permanently killed that weird valuation volatility going forward.
It is just so funny to see a horrible EPS print of negative 40 cents a share actually be the result of a surging stock. And quick disclaimer before we get too deep, this is just our personal take over virtual coffee, definitely not financial advice. But looking at the real business, the core operations of taking daily high-res pictures of the Earth, revenue came in at $94.15 million. That is up 42% year over year, which is huge. But profitability actually took a step back. Their non-GAAP gross margin dropped down to 56% from 59% a year ago.
Right, and that margin decay is an explicit strategic trade-off. They are absorbing much heavier depreciation from putting their new Pelican satellite constellation into orbit, and they are sharing their economics with AI partners. It is a necessary cost to win these massive 8-figure enterprise deals. They are basically prioritizing market capture over absolute profit right now. You see it perfectly in the segment breakdown, too. Global uncertainty is acting as a massive tailwind. Their defense and intelligence division skyrocketed 65% year over year, mainly because sovereign nations are absolutely scrambling to buy proprietary eyes in the sky.
Okay, yes. Speaking of nations scrambling, I read the anecdote about Sweden in the transcript, and we have to talk about it. Traditional aerospace usually takes years, sometimes literally decades, to launch sovereign intelligence hardware. Planet just put a dedicated satellite into orbit for Sweden a mere 4 months after the ink dried on the contract.
120 days from a signature to low Earth orbit. It is just completely unheard of. That kind of speed completely rewrites how legacy defense primes have to operate. It is a total paradigm shift.
It is wild to think about, although honestly, Wall Street seemed a little exhausted by the news today. The stock had a great run leading up to this, closing the regular session at $43.50. But then in after hours, there was this huge volatility spike up to $47 before the tape just sort of faded. It ended up closing the extended session down a couple percent, around $42.32.
Yeah, the market is probably digesting that margin drop and figuring out the noise from the GAAP loss. But honestly, underneath all the headline chaos, the core business is fundamentally transforming. They're sitting on a $730 million cash fortress now, but they're also hiding some really fascinating structural shifts.
All right, let's get into the details, because management is quietly making some very big changes to how we measure their growth.
Right, so they are officially killing the end-of-period customer count metric, which, honestly, when a software company stops reporting headcount, everybody immediately panics. It usually means churn is eating them alive.
Oh, absolutely. It is the classic hide-the-ball maneuver, like when a streaming service suddenly stops telling you how many subscribers they lost.
Exactly. But looking at the filings, it actually makes structural sense here. They are pivoting hard toward high-revenue whale deals on one end, and then low-touch self-serve users on the other through their Planet Insights platform. So a raw headcount just completely distorts the actual revenue momentum.
Because a $10 a month college researcher counts exactly the same as the entire Swedish Ministry of Defense.
Precisely. You do not want those two sitting in the same denominator. It just confuses the model. And Ashley Johnson, their CFO, explicitly talked about this dynamic on the call. She basically said she loves this kind of problem. She said, quote, "It's my favorite kind of upside. It's sales performance. When they bring in an 8-figure international deal early, it skews all the traditional metrics, but it is fantastic for cash."
That makes perfect sense. Although we just talked about defense flying high, but hold on.
Their overall civil government revenue basically flatlined year over year. I was looking at that, and it surprised me, especially with the international side booming so much.
Yeah, the NASA drag. That is the hidden anchor this quarter. International defense grew 65%, but civil government went nowhere, strictly because NASA actively reduced their contract scale.
Which is fascinating since NASA has historically been such a marquee client for this kind of spice data. Is this a broader federal budget issue or just a specific NASA scaleback?
Management pinned it specifically on NASA right now, but you do have to wonder, are other U.S. agencies like NOAA or Agriculture next? It highlights how vulnerable they still are, how dependent they are on unpredictable government appropriations, even with international demand offsetting it.
Okay, so defense is definitely carrying the weight right now, but let us look at another angle, because you mentioned the AI partnerships impacting gross margins earlier. The margin dipped down to 56%. How exactly does sharing economics with AI partners work out for them strategically?
So this is where it gets really interesting. Planet generates an ungodly amount of data, just daily scans of everything. But raw visual data is virtually useless to a non-technical enterprise buyer.
Mm-hmm. Right. You need someone to actually interpret the pixels so the customer knows what they are looking at.
Exactly. Will Marshall, the CEO, made a really good point on the call about this. He said, by leveraging Planet's daily data and integrating large language models, it can help non-technical users to search the data through space and time.
Space and time. That sounds very Doctor Who.
A very well-funded Doctor Who. But practically, it means Planet is choosing to sacrifice a few margin points to integrate AI partners who actually build out those search models. It is a strategic trade-off. They share the revenue, but it makes the data actionable for massive enterprise clients.
Okay. They're giving up a bit of the pie. Actually, no, they're letting partners take a slice to make the whole product fundamentally stickier. That connects perfectly with the story from Brazil I saw in the transcript, the SECON program.
Right, the illegal deforestation track.
Yes, the Brazilian government invested $59 million in Planet's data to hunt illegal clear-cutting in the Amazon. And because of the automated alerts, it triggered over $5 billion in fines and asset seizures. They dropped the deforestation volume by 60%. That only happens if the software can proactively flag the chainsaws, not just hand over a static picture.
Over $5.3 billion in seizures, to be exact. It is an unbelievable return on investment for Brazil, but it proves the margin strategy perfectly. You do not sell raw imagery for that kind of enterprise scale. You sell the automated insight. The AI trade-off is worth it if it keeps net dollar retention high. And they are still sitting at a very healthy 113% right now.
It is just such a tangible human impact story, too. They did the exact same thing in Panama. They took the response times for forest fires in the remote Darien Gap from literally weeks down to a matter of days. That's the real-world translation of what these AI integrations actually look like.
The satellite gathers the pixels, but the AI triggers the fire engines. And that really brings us back to the physical infrastructure itself. Because to power all this new analytical demand, they need much better hardware in orbit.
Yeah, let us step back and look at where this is all heading, because their capital expenditure guidance for the rest of the year tells a very specific story about their future.
Right. Q2 capital expenditures are stepping up heavily, 21 to 27 million just for the next quarter. And for the full year, they are pushing up to, it's roughly $80 to $95 million to finalize the manufacturing on these next generation fleets. You do not spend that kind of capital if you are just coasting.
No, exactly. You spend that when you are, strapping a rocket to the business, literally and figuratively. And the crazy thing is, it is working on the top line. They raised their full year revenue guidance up to $441 million.
Yeah, that is roughly 41% growth at the midpoint. It's huge. And the CFO, Ashley Johnson, was actually very unapologetic about letting margins slip to achieve it. She explicitly said on the call that the investments they are making are really prioritizing growth and market capture. They want to sustain that massive growth rate first, Figure out the margins later.
Which, honestly, is a very comfortable position to take when you're sitting on a $906 million backlog, and they have, over $700 million in cash now?
Right, $730 million. The balance sheet is basically a fortress at this point. But it's not a completely clear runway. There's a fairly large regulatory landmine coming. Europe is drafting this new EU Space Act.
Ah, right. I saw the risk warning in the 10K for that. European regulations are always wild.
They really are the final boss for every tech company. Planet grew 86% in EMEA last year, so they rely heavily on that region. But this new draft law could actually force third country providers to physically redesign their hardware or completely change their production models just to keep market access. It's a massive structural unknown.
Jeez. So they successfully killed their accounting volatility. They're launching Swedish defense assets in 4 months, and now they just have to outrun the European legislature.
Basically, yes. But honestly, if you step back and look at the whole picture, this quarter feels like a real graduation. They're leaving those pure software vanity metrics behind. They're transitioning from a Silicon Valley data play into an actual physical pillar of global defense infrastructure.
It's a totally different ballgame now, from selling subscriptions to literally renting out the highest possible high ground. Okay, I think that's a perfectly dramatic place to wrap up our orbit for today. If you like having these earnings chats just naturally show up in your feed, definitely follow the show. This whole project is an experiment using AI to actually read through all those dense SEC filings so we can just sit here and focus on the human story. If there is a ticker you want us to unpack next, drop us a note at earningsunscripted@datamadness.ca, or you can just grab the X link in the show notes. Thanks for hanging out.
See you next time.